And our next guest is trying to put some math behind all of the trade number headlines. Clay Kahn is Managing Director at Neuberger Berman and joins us here with an investment perspective on the trade story. And Clay, we've been hearing from all sorts of industry participants today, how they're navigating it. But I think this continues to be one of the biggest questions for the broader market is how do the trade uncertainties impact the world of the stock market through the economy going forward? How are you thinking about this right now?
Good to see you, John. Thanks for having me. And it's the right question, but our view is that this is one of many pieces of the puzzle, the tariff uncertainty. But just sort of putting it all together, our view is that we're in and heading into a mid-cycle slowdown, which is an environment that companies can continue to perform well. Just to put some numbers around that, the first half of this year in the U.S., GDP numbers on a real basis were about 1.1%. Earnings estimates for Q2, most companies reported, as you know, and your viewers know, they came in, the consensus was about 5%, and earnings estimates beat at 9%. So the growth has been there, and our view is that in the second half of this year, you'll see the economy perform at this sort of similar range, 1 to 1.25% growth, and then companies can deliver. And there's a couple of tailwinds that I'm happy to address if helpful.
Well, yeah, let's go into it. I mean, it was even just as sort of anecdotally at the end of last week, you saw a sell-off in the market because you had a weaker than expected U.S. jobs report.
Yeah.
But then all of a sudden, people started talking about, well, maybe the Fed will actually cut interest rates now, and so that's sort of got people back to being somewhat excited. But sure, I'd love to know what the different pieces you're watching.
Yeah, for sure. And that's a great point. Odds of a Fed cut going up in September went from 40% to 80% in one day. Yeah. So our view and our fixed income team's view is that you'll see a cut in September and a cut in December. So you'll see that sort of stimulus as it relates to monetary policy where you'll see easing and more dovishness from large central banks. But the big one is fiscal, on the fiscal side. On the U.S., you saw the passing of the OBBB bill. There's some nice features in there for companies to, boost CapEx. The full depreciation of, investment spend today in that tax year is pretty powerful for companies. There was an article in the Journal that you probably saw that shows that a lot of these large companies, including tech companies, will really benefit from that on a free cash flow basis. So that's important in the U.S., but in Europe, you probably see what's happening in Germany with the big fiscal spending package for infrastructure and defense in Japan. There's some pretty exciting things going on the fiscal side and the corporate governance side that we're excited about.
Now, I guess the other part of the question is when there's an area with momentum, how long can that momentum continue? I was looking at some notes that you provided our producing team with, and I love my stats, and I saw a stat that I had not thought of yet, which is that Nvidia's market value now exceeds the entire market capitalization of the TSX.
That's pretty wild. I'm not making a statement on Nvidia. I'm sure it's the greatest company in the world. But when one company overwhelms the market value of the Canadian stock market or the UK stock market, two big G8 economies, you have to wonder if there's opportunity within those. And it sort of plays within our theme of non-US investing. A lot of investors are overweight the US. For natural reasons, there's been strong price performance. The U.S. makes up about 2/3 of the all-country world index, but if you look at investor portfolios, they're dramatically underweight Europe, Japan, EM, Canada, UK. So there's definitely opportunities for investors to do that. And just talking about stats, the S&P 500 is up nicely this year, 8%, but the EFI index, so Europe and Japan's up 18%. So there's definitely, and that's on a dollar basis, so there's some currency noise in there, but there's definitely opportunity there.
Yeah, so how do you think about opportunity? Like, I think sometimes the other word people use with the Canadian market is value. Now, if you want to, and actually Bloomberg did some great analysis of that recently. They looked at the potential, they looked at the valuations on average for Canadian stocks versus U.S. stocks.
Yeah.
Then they looked at the expectations for earnings growth for Canadian stocks versus U.S. stocks. Yeah. They put all that together and they said, you could make a good case that there's value in the Canadian market. But how are you recognizing that possible value in a market like Canada, just as an example?
Well, in a market like Canada, Canada makes up about 2 to 3% of the global equity indices. So we're not suggesting that investors massively overweight Canada, but what we're talking about is looking at non-U.S. stocks, particularly Europe and Japan, where you see valuations on a forward PDE basis of 15 times. And the S&P 500 trading at 23 times. And there's lots of great companies in the S&P 500. They are best in class, but there is that valuation opportunity. But what's the catalyst? And it's this fiscal and monetary packages that we're talking about.
And just a final question, because obviously you're monitoring the trade uncertainty, but so far we've seen economies navigating relatively well. We had a conversation with a representative from the steel industry in Canada who seemed to be implying that he'd like to see, us punching back in greater force.
Yeah.
It still does feel like early days in whether countries have signed trade deals or countries that are on the fence about signing one if it seems bad, like Canada. So they just feel like there's just a myriad of wild cards in that, you never know where things are going to turn from here.
Absolutely, and there's some industries that are acutely affected by the tariff uncertainty, but just to put some numbers around that, based on RBC or BOC estimates, I read a BOC report yesterday that said 95% of goods that are exported to the U.S. are covered by the USMCA, and those are not subject to tariff. So, to use 5 to 15% bans of goods that are exported to the U.S. that, are subject to the tariffs, it's concerning for those sectors, so steel, autos, copper. But, I read in the gym this morning that Carney and Trump might be speaking before the August 7th implementation.
Yeah.